Despite the craziness we saw this past weekend, we actually see oil prices dropping this morning, the dollar index also dropping, gold pushing higher, and stocks back on the rise. And this all follows the events of this weekend. Israel hits notorious Iranian prison as White House reiterates that the U.S. totally obliterated nuclear sites. And Iran vows a response. The Iranian military officials and members of parliament vowed that the U.S. will pay a price for its strikes on the nuclear sites. Meanwhile, Trump alluded to the possibility of the regime change in Iran in a social media post on Sunday. The U.S. bombing likely caused very significant damage to the underground parts of Iran's Fordow, I'm not sure how to say this, nuclear site, the UN's nuclear watchdog said on Monday. And this is the 11th day of this event. And also Trump warned, quote unquote, everyone to keep oil prices down following the Iran strike. And while initially the oil market jumped on the open here due to obviously what we just got done discussing, we have now actually seen oil prices completely reverse and move lower here today. Oil prices at the time of recording this video today are down 1.6%. But in my personal opinion, I do think there's a probability, and I think the market is sniffing this out right now by selling oil prices, that Iran will actually respond in some ways to the US's advances with a backing down approach, despite people, of course, thinking, oh, Iran's going to respond big time. Well, if they continue down this path, it could lead to some serious devastation and a possible regime shift. And we've had a bit of breaking news since I recorded this video. Iran launches missiles at the US military bases in the Middle East. This is a new development here. Just wanted to add this for context. By the time you guys see this video, oftentimes stuff has changed. However, we still see the price of oil trending lower here, down 2.66% at one point, still coming off of its big jump up over the weekend. Very curious as to see what happens next. Of course, I'll keep you guys posted as much as I can on my channel. Make sure to subscribe for updates. This morning, we heard from Fed Governor Bowman, who favors July interest rate cuts if inflation stays low. Governor Michelle Bowman said Monday she would favor an interest rate cut at the next policy meeting in July, so long as inflation pressures stayed muted. Bowman's comments are similar to those from fellow Governor Christopher Waller, who told CNBC on Friday that he also thinks the Fed could consider cutting interest rates in July. And if you've been watching my videos, I'm kind of in this camp too. Not that I'm a Fed official or anything. And Bowman, like the article just suggested, seems to be backing up Christopher Waller's comments last week, who essentially seems to be calling for rate cuts as soon as July. It is worth noting that Christopher Waller was appointed by President Trump, and there is a little bit of a tinfoil hat move here. Of course, we know Powell is not very liked by Trump, and some people are suggesting that this may be a play at that role for Christopher Waller. So who knows? We'll see. This morning, in response to the geopolitical headlines, we did see also a spike in the US dollar, and I actually did take this as an opportunity to get short the dollar. Specifically, I went long euro US dollar. And so we've seen a sharp reversal here. This trade that I took this morning, I pretty much caught the lows. Now, I wish I could say I do this every time, but we had a really nice rally here since I hit the buy button on this one, and I'm currently sitting in a nice profit from the signal that was shared this morning. So within our signals room, I did two things this morning. I closed out a profit on the Australian dollar versus the Canadian dollar short position that I took for a 72 pip profit target there. And then following that, I bought the euro dollar here around 1.1463. And you can see the chart that I sent out as I took that trade this morning. My analysis behind this trade is that I think that the US dollar strengthening a bit on the geopolitical concerns over this weekend could give me a chance to buy into the euro dollar trade that I've been looking for. If you've been watching my videos recently, you know I've been looking for this trade, and I've been looking to get long at support levels, which kind of hit this morning, with willingness to add size to the trade if we do see further dips in the euro dollar. And I don't have a target on this trade. I do think that the euro dollar has more upside here, and that we could continue to see the dollar trend lower. And so I do think I'd just like to hold on to my euro dollar position. If we can continue to rise higher, I'll keep an eye on the fundamentals and essentially exit the trade when something changes. But right now, most of our data points, in my view, suggest more dollar weakness. Let me show you why. The US economic heat map on the EdgeFinder tracks a huge collection of economic data and essentially generates a bullish or bearish impact for all of the different metrics that we look at. PMIs, NFP reports, GDP statistics, CPI numbers, all of these things are tracked automatically by the EdgeFinder, and we keep an eye on the surprise index to see whether or not these things could likely drive a further bullish or bearish trend in the dollar. And I have something exciting about the EdgeFinder today. It is currently, for this week only, available to everyone watching this video for free. So we're doing a 1-week free access period starting today until next Monday. For this week, you can pretty much try out the EdgeFinder, and within 1 minute from now, if you click the link in the description down below, you can sign up to get access to the EdgeFinder during this free week event. You can explore all of our features like the economic heat maps, our COT data, our top setups algorithm, and much, much more. So take advantage. It is completely free this week. Take advantage by clicking the link in the description down below, filling out that quick form with your email, and we'll send you access to that email right away. Like I said, it takes less than 1 minute to get access to the EdgeFinder free version. So enjoy the tool, and all I ask is that you give us some feedback on what you think we can do to improve this tool to make it the best for retail traders in the space. Taking a look at indices here this morning, the S&P 500 is bouncing back so resiliently, and this has been so impressive recently. This year, the indices have been so resilient, despite what so many people thought was kind of a doomsday event with the tariff situation. We've now seen back one of the greatest, sort of profit potential environments for stocks that I've seen in my entire trading career. If you were able to capitalize on this sell-off, if you were buying the dip, we've seen moves in the S&P 500 of 20+% at an index level, let alone things like Tesla, which is up another 10% today. From the lows here, you're talking about a move in Tesla of 65%. So if you caught the dip in stocks, congratulations for being bold when everybody was scared. And for reference, the AAII Investor Sentiment Survey, which is something we often look at in my videos, showed us that, again, people got the most bearish right at the bottom of the stock market. This is not coincidental. It is, in my opinion, by design. The market does a great job of freaking everyone out, getting everybody to sell their shares just at sometimes the best possible buying opportunities. This was a multi-year high in terms of bearish sentiment as those tariffs got announced. And meanwhile, that was actually the best buying opportunity that I've seen in many years for the stock market dips. So if you had the courage to step in and buy great companies or even trade the indices on the long side during that time, you likely did very, very well. And most people who got scared and gave in to the fear and the headlines probably did not do so well. So if you did not do so well, I'm not trying to pick on you, but I would encourage you to be conscious about sentiment indicators that we use on this channel over and over for this very reason. You don't want to be caught chasing the same thing that the entire crowd is chasing, especially if it doesn't fully, if the data out there, the economic data, does not support it. We did not see a dramatic rise in unemployment. We did not see a massive, sharp decline in GDP numbers. We didn't see unemployment claims spiking higher. We saw things mostly holding together, and yet people were so fearful around the tariffs that they sold their whole portfolios. And I'm talking about even at the hedge fund level. We had major players just dumping stocks out of fear for what could come next. And that ended up being, like I said, one of the best buying the dip opportunities that I've ever seen in my trading career. And for those who also, capitalized on that move, congratulations for being brave when everyone was scared. That's the Warren Buffett 101, be greedy when everyone's fearful. And so with indices, do I think that there is, more upside? The answer for me would be yes. I do think that we have more upside to go in the indices as we sort of pivot into phase 2 of all of this stuff. Now, I know it's kind of crazy to think, how could the markets be trending higher during a time of geopolitical uncertainty like we're seeing? But remember that unless you get, and there is an if here, if you get a huge spike in oil prices, everything that we've talked about that was very bullish in today's video, like for example, the Bowman comments, the Waller comments, these Fed officials, they've all kind of said they want to cut rates if inflation stays under control. On Friday, I did a video where I talked about if oil prices break into the high 80s, we've got a problem. And that all goes out the window. So we're going to keep an eye on this because oil prices play a really big role. Hence why the president made a big, threat to everybody. Hey, don't give in to the enemy. Keep oil prices lower. Although that's not quite how the oil market works per se. He is getting at a very important component to the whole inflation story. If oil prices rise dramatically, it breaks the entire narrative. And we talked about that a lot last week. So same thing, right? When we watch these oil prices, where they currently are is not super threatening. We're in the 70s. We're fine here. But if you start getting into the high 80s, into the 90s, and into the 100s, you now have inflationary pressures big time from the price of oil. So we'll have to keep a close eye on this. And of course, at the end of the day, I have no idea what's going to happen next in the Middle East and don't claim to. But I do know that if oil prices dramatically rise, I have to play that into my calculus of how bullish I am on indices. So I'm watching it really close. If we get a big breakout, that will make me a little bit more cautious. But if we can hold levels or even move lower from here, that continues to support rate cuts, in my opinion, for this year. And just a reminder, this investor sentiment survey is something that I really love. If you want to check out all of our market sentiment tools during our free week event, like I said, use that link in the description down below. It's under market sentiment. You can pull up the AAII investor sentiment survey. It's a weekly survey that I track pretty frequently in my videos. Another sentiment indicator that I like looking at is the Bitcoin to gold ratio, which has recently started going back in the negative direction, suggesting a little bit more of a risk-off environment. Remember that when Bitcoin is dramatically outpacing gold on this channel, I typically call that more of a risk-on environment, and vice versa. The put to call ratio still remains elevated as most investors are still scared and seem to be uninterested in taking that risk. So they're buying puts on the options market. This to me is a great sentiment indicator to suggest that the crowd is still relatively worried out there. We do also see that present in the high elevated 41.4% of bearishness coming in on the investor sentiment survey, which still outpaces bullishness to this day. And the British pound is also bouncing higher. Many currencies seeing a little bit of dollar decline here. Look at dollar yen, which tapped into this 148 level of resistance quickly before selling off. Dollar Swiss is back towards the session lows here. Dollar CAD also hitting into a resistance point here. We'll see how this price level reacts. And the Australian dollar had one of the most violent turnarounds that I've seen in a while. Take a look at this drop on the intraday and then completely reversing here. Possible pin bar forming on the Australian dollar versus the US dollar. Kiwi dollar, same thing. And some of our yen pairs continue to push higher here. Big breakout occurring on the pound yen from a level that we talked about extensively last week during the live streams. Big level of resistance at 196 breaking, looking like it is headed to test those 199 or fresh highs for the pound yen. Euro pound is a short position that I have in drawdown at this time. I have two short positions currently open. I will look to add a third and a fourth on my dollar cost averaging campaign on the euro pound if we do see a move up to levels like 86 and 87. When it comes to currencies, people often ask me, hey, Nick, why do you use a different approach in Forex? I use a dollar cost averaging approach that I've done a full video on that I'll link in the top right hand of the screen right now if you'd like to check that out. It's a popular video on my channel for talking about my strategy in Forex, which mixes fundamental analysis and a simple technical analysis approach. If you're interested, explore it up there. And here's another trade that I'm sitting in drawdown on. I'm sitting in two long positions on the CAD Swiss and currently in drawdown. So we'll see if we can get a bounce in this currency pair, but for the most part, still just sitting in this choppy market where we haven't really moved too far on CAD Swiss.
All right, man, let's make a bet. Whoever gets funded first, the other person has to pay him $100.
All right, I'm down.
Sweet. With my new fair value gap, triple witching, timing strategy, you stand no chance.
Okay, I just got funded.
What? How? We just started.
With Maven's new instant funding program, you can get funded for just as little as 19 bucks. They offer some of the best industry pricing, fast payouts, and you can trade pretty much anything on their prop firm. If you'd like to check out Maven's instant funding program, the link and information can be found in the description below. You owe me $100, man.
Come on, man, that's not even fair.
So you've got dollar yen. It came back. What happened there?
Well, that's what I'm wondering about, because yen pairs has hit take profit on the weekly. So that's also what's happened on dollar yen. So maybe it's a profit target that I should take profit now. So I'm stressing a bit, should I take profit? But it's too early now because I'm not supposed to do that. So it's not in my way to trade. But I feel like if I don't do it now, I'm going to lose a lot of money. So yeah.
Yeah. So you're taking profits on it yourself?
No.
Okay.
There's only two rules: either take profit or stop loss. So it can't be emotional trading, can I?
You certainly shouldn't be. But yeah, no, that sounds good on the yen pair. Well, or the dollar yen up 0.7% here today, jumping up. A lot of the yen crosses moved higher this morning. So you're still long dollar yen. Are you watching any of the other yen pairs today as well?
No, as I was watching the euro yen, but that also hit take profit. at 169.62 on a Monday morning, which to me, all my rules and my regulations says that's the peak, and then we're going to pull back quite hard. So, yeah, the problem that I have is that this war kind of triggers everything into one direction, and then it probably is going to take profit, and it just collapses on you. So if you don't take profit at the right time, you will stand there with empty hands.
Yeah, that's fair. So you're looking at these, and by the way, for viewers in the audience, tell us a little bit about these target levels that you have on the chart right now.
So this is a free indicator. It's pivot point. So on the previous period, so you create a high and a low, and the close price, and with that it creates an average, which is this central pivot. And from that, it is calculated like 1 or 2 times out from the target, from the central point, is a target in either in a bullish or in a bearish direction. And when you start the week, you're like, okay, are we bullish or bearish? You decide that, and then I don't trade above the green box or beginning of the green box, because that is likely where target hits or where price goes and then falls down, like it did last week, like it did a week, like it did the other week, like it did the other week. So it's kind of like a natural place. So more than anything else, it's just future support and resistance that you can do regardless. You don't need this, but it's easier.
Yeah, awesome. Very cool. And yeah, that's available on TradingView. It's a free indicator for everybody in the audience to check out for themselves. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.